Will SCHD crash in 2025? Must-know strategy: buy, sell, or hold this dividend ETF. Welcome to WealthEchelon, your go-to destination for expert insights on finance, stocks, and ETFs. Our mission is to empower you with the knowledge and strategies needed to navigate the financial markets with confidence. Whether you're a beginner looking to build a strong investment portfolio or an experienced investor seeking market trends and analysis, we've got you covered. Join us as we break down complex financial concepts, explore market opportunities, and help you climb the ladder to financial success. Subscribe now and take control of your wealth journey. Is SCHD heading for a crash in 2025? With market uncertainty, rising interest rates, and recession fears, many investors are wondering, should you buy, sell, or hold this top dividend ETF? In this video, we break down the risks, opportunities, and the best strategy to protect your portfolio. Stay tuned to find out if SCHD is still the ultimate dividend investment. The Schwab U.S. Dividend Equity ETF, SCHD, is one of the most popular dividend ETFs in the market, known for its focus on high-quality dividend-paying stocks. Since its inception, SCHD has attracted both income and growth investors who appreciate its strong dividend yield, solid fundamentals, and cost-effective structure. However, with concerns about market volatility, interest rate shifts, and potential economic downturns in 2025, many investors are wondering, will SCHD crash in 2025? SCHD. What makes it popular? Before analyzing SCHD's potential trajectory in 2025, it is important to understand why it has become a go-to choice for dividend investors. One of its key strengths is its focus on high-quality dividend stocks, as it tracks the Dow Jones U.S. Dividend 100 Index, which consists of financially stable, high-yielding companies with strong histories of dividend growth. Additionally, SCHD is one of the most cost-efficient dividend ETFs, boasting a low expense ratio of just 0.06%, making it an attractive option for long-term investors looking to minimize fees. Another major advantage is its commitment to consistent dividend growth, which appeals to those seeking passive income and financial stability. Furthermore, SCHD offers a well-diversified portfolio of large-cap U.S. stocks, reducing the risks associated with single-stock investments. Due to its strong emphasis on quality and stability, SCHD has historically outperformed many other dividend ETFs. However, the big question remains, can SCHD maintain its strength in 2025, or is a major downturn looming? Factors that could cause SCHD to crash in 2025. While SCHD is considered a strong investment, no ETF is entirely immune to risks, and several factors could lead to a significant decline in its price. One major concern is interest rate uncertainty, as the Federal Reserve's monetary policy plays a crucial role in SCHD's performance. Higher interest rates tend to put pressure on dividend stocks, making bond yields more attractive and potentially causing investors to shift toward fixed income investments. If the Fed keeps rates high or raises them further in 2025, SCHD could face downward pressure. Additionally, recession risks pose a threat, as a slowing U.S. economy could lead to declining corporate earnings, affecting the stocks within SCHD's portfolio. While dividend ETFs generally perform better than growth stocks during downturns, a severe recession could still force some companies to cut dividends, weakening investor confidence. Another potential challenge is a market rotation away from dividend stocks. If a bull market favors high-growth sectors such as technology, SCHD's performance may lag behind. Investor sentiment plays a significant role, and if growth stocks become the dominant force in 2025, SCHD could struggle to keep pace. Furthermore, dividend cuts from key holdings could negatively impact SCHD, as its stability largely depends on companies like PepsiCo, Amgen, or Broadcom maintaining or increasing their dividend payouts. Any reductions could trigger sell-offs, putting further pressure on SCHD's price. Lastly, geopolitical and global economic uncertainty remains a risk factor, with trade wars, global conflicts, and supply chain disruptions potentially affecting corporate earnings and market stability. If uncertainty remains high in 2025, SCHD could experience increased volatility, making it crucial for investors to stay informed and evaluate market conditions carefully. Why SCHD might not crash in 2025? Despite potential risks, there are strong reasons why SCHD may continue to perform well in 2025. SCHD has several strengths that could help it maintain stability and even perform well in 2025 despite market uncertainties. One key advantage is its resilient dividend growth strategy, as it focuses on financially sound companies with strong free cash flow and sustainable dividend payout ratios. This approach ensures that SCHD remains stable even in volatile market conditions. Additionally, SCHD has demonstrated strong performance during market downturns, as dividend-paying stocks tend to be more defensive and provide stable returns when broader markets decline. This resilience makes SCHD a preferred choice for conservative investors seeking steady income. Another important factor is its long-term investor base, which primarily consists of income-focused investors rather than short-term traders. This reduces the likelihood of panic selling during temporary market corrections, helping SCHD maintain its value over time. Furthermore, potential interest rate cuts in late 2025 could act as a catalyst for SCHD's growth. While high interest rates may pose short-term challenges, a slowdown in economic growth could prompt the Federal Reserve to cut rates, making dividend stocks more attractive to investors. Lastly, SCHD's dividend yield acts as a cushion during market downturns. If the ETF's price declines, its yield increases, drawing more income-seeking investors and providing a stabilizing effect. These factors collectively make SCHD a strong contender for investors looking for a reliable and resilient dividend ETF in 2025. Buy, sell, or hold, the best SCHD strategy for 2025. Now that we've explored the risks and opportunities for SCHD in 2025, the best strategy depends on your investment goals. For long-term investors, holding SCHD is likely the best option, especially if you're focused on consistent dividend income and growth through reinvestment. If you're looking to buy, consider taking advantage of any price dips due to market volatility or interest rate hikes through dollar-cost averaging. For short-term investors or those with a lower risk tolerance, reducing exposure or diversifying into other assets might be wise if you expect continued market instability. Lastly, if you need immediate cash or anticipate a significant downturn, selling could be an option, but it should be carefully considered to avoid locking in losses. Should you buy SCHD? You should consider buying SCHD if you are a long-term investor focused on passive income. You believe dividend stocks will remain strong despite market volatility. You see SCHD's dividend yield as a reliable source of income. You want exposure to a diversified, high-quality portfolio with strong financials. If SCHD experiences a pullback in early 2025 due to rate hikes or recession fears, it could present a good buying opportunity for long-term investors. Dollar-cost averaging, DCA, is an effective strategy for accumulating SCHD over time. Should you sell SCHD? You might consider selling SCHD if you need short-term capital and cannot wait for a recovery. You believe the market will shift aggressively toward growth stocks. You think bond yields or other investments offer a better risk-reward ratio. However, unless you have a pressing need for cash, selling SCHD may not be the best move, as it remains a strong long-term dividend investment. Should you hold SCHD? Holding SCHD is the best option if you already own SCHD and appreciate its stable dividends. You are not concerned with short-term volatility. You believe SCHD's holdings will continue delivering strong dividends and growth. For most investors, holding SCHD through market fluctuations makes sense, as dividend reinvestment can enhance long-term returns. Will SCHD crash in 2025? While SCHD faces risks from interest rates, recession fears, and market sentiment shifts, it is unlikely to crash in 2025. The ETF's focus on financially sound, dividend-paying stocks makes it a strong defensive investment. Even if short-term price declines occur, SCHD's reliable dividend yield and long-term resilience make it a solid choice for passive income investors. For those considering SCHD, a buy-and-hold strategy with dividend reinvestment remains one of the best approaches. If the ETF experiences temporary declines, it may offer an attractive entry point for long-term investors. Ultimately, your decision to buy, sell, or hold SCHD in 2025 should align with your financial goals, risk tolerance, and investment timeline. That's it for today's video. If you found this helpful, don't forget to like, subscribe, and turn on notifications so you never miss an update. At WealthEchelon, we're all about helping you navigate the world of crypto, investing, and financial growth. Have any thoughts or questions? Drop them in the comments below. I'd love to hear from you. Stay sharp, stay invested, and I'll see you in the next one.